Just over $1, 80 euro cents and 66 pence sterling.
For more on finance, we're joined by the Executive Director of Bourse Communications, Rod North. Great to have you with us, Rod.
Good morning.
Good morning.
The markets so far this year have been very lacklustre, haven't they?
Absolutely. It's been a very flat start to the year. In fact, it's about as exciting as watching paint dry. So I think if anyone's come back from holidays in the finance sector, I think they're looking for a bit of action. But one of the things I suppose it is highlighting is, I suppose, some pretty good value off the back of where it's currently positioned. I mean, we did see the market way back in 2007 get up to 6,800. We're currently around, 4,200. So yet the US market, of course, is not that far away from its high. So I suppose we're starting to see, I think, people look for value, and it's interesting, particularly with what the US equity group, private equity group KKR, have announced today, which is in the Financial Review, about looking at Pacific brands. I think certainly that retail sector is going to come under some significant focus over the next few months, perhaps because of the value and looking, for the future as to when the market and the recovery eventually kicks in.
And speaking of the retail sector, the latest figures confirm a pretty dismal outlook for that part of the economy.
Yes, and those figures that came out yesterday for retail trade were for November, and the figure came in at 20.93 billion, which sounds like a big number, but market analysts were expecting that the increase should have been around 0.3 or 0.4. Now, bearing in mind that this comes off the back of an interest rate decrease, the first one we had for 2.5 years in November of 25 basis points, so you would have thought that that would get a bit of a kick. And then, of course, we had another decrease in December. So I think the figures to watch will be those December figures. But what it's really showing is that consumers are just still not spending money. And it's interesting, watching a lot of, media reports, because it's the social commentary where people are saying, well, we just don't have any money because, utilities and services and the cost of living is so much higher that we just don't have any, extra discretionary expenditure. I think that's really mitigating, as well as the online, position, and of course, other, sort of key factors that prevent consumers from spending.
Now, where they are spending is not surprising, I guess, because house prices are down and interest rates are down, and new sales data shows that people are buying back in the property market.
Yes, that was the one thing that perhaps wasn't a surprise at all, because you'd expect with interest rates coming down that new home sales, would spike up. So that rate kicked up 6.8%, which followed the earlier month of October by 2.8. So that's actually showing, quite a good trend. But I think, the expectation is, as the year develops, to actually get people spending again and getting the, home sector, improving. It does sort of highlight that further sort of focus on, the outlook for rates and perhaps getting the calibration of that cash rate right into the future.
And pretty flat on Wall Street overnight, a fairly flat outlook today.
Pretty flat, yes. I think we may even get into positive territory of a couple of points. At least that'll be something to cheer about. But we're waiting for the big recovery, which I think probably will be in the second half of this year.
Oh, well, that's something to look forward to. Rod North, great to see you. Thanks for coming in.
Thanks very much.